Welcome, everyone, to another edition of Insightful Principles. My name is Kevin Jenkins, and today I'm here with a special guest. Her name is Anna Najee Konte. Did I say that correctly? With
No, but I wouldn't expect you to on the first go.
what's the correct pronunciation?
It's Ananyai Conte.
Okay, all right, I got it now. Anna Najee Konte. I'm gonna get it. I'm gonna get it
We'll
right.
keep practicing. We'll keep practicing, Kevin. Don't worry.
So, just to give a brief intro on Anna, she's a certified financial planner. She's a mother, entrepreneur, speaker, also the founder of Dare to Dream Financial Planning. She also is a native New Yorker. Anna practice has been seen in many articles such as the Business Insider, Journal of Financial Planning, and also CNBC. This episode, we're really going to go into details on building generational wealth, the systematic and societal challenges amongst blacks in the industry. And lastly, we will have a conversation on how the industry can become more diverse and inclusive with black financial planners. With that being said, Anna, welcome to the show. I'm glad that you're here.
Thank you so much, Kevin. It's a pleasure to be here. And I'm always
Of,
happy to talk about this topic because it's something that I feel very passionately about.
of course, I would say the same as well. Now, to get things started, can you please share with the audience a little more about your background and experiences and also what led you into financial planning?
Yeah. I grew up very middle class, right? I didn't grow up in a family that invested really or that had much knowledge about anything beyond like basic banking and debt principles. And I mean, very basic, right? Um, I went to school thinking I was going to do something completely different. I thought I would work like in international affairs, international relations, nonprofit type of work. And then I graduated in the Great Recession, right? And so I had to use whatever skills I had. And the skills that seemed to make me the most employable were my language skills, right? So I'm half Puerto Rican, half Gambian, but I speak Spanish fluently. It's my second language, right? And so I got a job working, doing business to business events in Latin America, right? And so through that, I did an event for people that wanted to get into wealth management, private banking. That used to be a really big space in Latin America, not so much anymore because of a lot of regulatory things. But, back in 2008, 2009, that was still a really big thing. And so I organized this conference, and just in talking to people that were working in the industry, a lot of whom were US based, right? Like based in Miami or New York, but just worked with people in Latin America. I saw that it had a lot of skills and utilized a lot of the skills that I have. And I just thought it would be really cool, right? And so I left there. I started looking for work in earnest shortly thereafter. And within 6 months, I'd say I was in the industry, which is not a small amount of, it's not a big amount of time when you think about totally changing careers, right? And I had no finance background whatsoever. I was always good at math, always good at problem solving. I was always had good interpersonal skills, but I had no clue about investing, anything about investing or financial management or anything at the start. Over the years, I've been in the financial services industry for about 10 years now. But I I spent about 8 years, moving around trying to find a good place for me to really allow me to do more of what I loved best, which led to me leaving and starting my own firm in 2019.
That's so great to hear just the journey and how you really were able to get those experiences within the industry to really figure out your passion. And those are things that I usually recommend to people is that it's best to, especially when you're coming out of school, especially if you're in a recession, just trying different things to really learn, what's your niche and what's a career that you really enjoy. So it's great to see that you were able to get the experiences, and now with being in the industry for 10 years and starting your practice in 2019, that's actually what I really wanted to talk about When you started your practice in 2019, what made you decide to call it Dare to Dream? Where does that name really come from?
Yeah. So, I spent 10 years in the grind, right? Doing that corporate ladder climbing and trying to negotiate and manage the bureaucracy, right? And we all know that can be very difficult as a non-white male, right? Like, especially as a black woman with this hair and with my attitude, it can sometimes be challenging. I'll be the first to admit it, right? You could take me out of New York, but you can't take New York out of the girl. So, I'm easy to get along with, but I have my opinions, right? And I have a very strong sense of ethics and what's right and what's not right. And I'm not somebody that's willing to go along for the get along just because, and be treated any which way just because, it means I get a paycheck. Like I'd rather eat ramen. That's how I get down. Anywho, as an aside. But I spent 10 years in the grind and really kind of lost myself through that. I felt like I was really limiting myself in terms of what I thought was possible for myself. And, it wasn't until after I was out of the job for a while and really getting some concrete time under my belt and time and space away from the job that I could see how much I was limiting myself. I also think once I started to get into the exciting startup phase where I'm trying to figure out all the cool stuff about my business and just navigate that whole thing, I realized that so many of the people that I was talking to and were, kind of doing informational interviews with that would be ideal clients of mine, they all had that same, I won't say thinking small, but not necessarily seeing the full possibilities of what they could do with their money, right? I was very fortunate that, and what money could do for them in their life. I was very fortunate in working in wealth management for so long because this was not my experience as I was growing up, but to be able to see through my work that a lot of very normal people were able to amass a significant amount of wealth, more than anybody I know ever had, right? Just by being diligent savers and investors and making smart decisions with their money. And so I wanted to, really kind of encapsulate that aspirational message in my firm's name. So that's where it came from.
I love the name, and I definitely think that, especially, with me currently working in the corporate world and finance, and also, like you mentioned, with climbing that corporate ladder, oftentimes it can take us away from our dreams because, we're in a controlled environment. But when you really take the time outside of work to think of the possibilities of life and really chasing your dreams at the highest level, I think that everyone should, really think of ways of how they can control their life on their own terms. And I think for you to branch away from that, to be able to take a chance on yourself, it really is inspirational. And, I really wanted to just get your perspective of what is the process of creating a financial advising practice for someone like myself that has aspirations of doing it as well? Can you really kind of go through those steps on how you took it from an idea and made it into a reality?
Yeah. I have to, it was a big journey, right? I thought about this for a long time before I actually left, probably a good 4 years before I actually pulled the trigger and left, right? It was a whole confluence of professional and personal reasons for why it took me that long, but I'm a mom. I wanted to be responsible. I'm also, I think most financial planners are pretty financially conservative people, so I want to make sure my ducks were in a row, but I think it was a real new world for me because I came from the wirehouse, like broker dealer type of world where, I knew about registered independent advisory firms, RIAs for short, right? I knew about those through just, working in the industry, but I didn't really understand how they worked. I didn't really understand the intricacies of it. I thought it was more of like your Edward Jones, your Raymond James type of thing, where, you know, which is still a channel, right? But where you just use the services and the platform of those firms, and you do your own thing, but you're still kind of under their umbrella. I never was aware of that you could go fully independent, right? So it was a huge learning curve for me. I will say there are so many resources available for somebody who's interested in that, right? I'm a member of XY Planning Network, which I was not from the beginning. And, you know, I can talk about my reasons for that too, but they used a lot of their free resources in trying to figure out like what I need to be doing to get my firm registered, right? How much it would cost. It's a cumbersome process, I think, for anybody, especially if you're not used to that world, right? There's a lot of regulatory filings and things like that, but you know, really, that's just semantics, right? It's just the logistics that you don't have to get too granular about. It was mostly the biggest part of my journey in terms of starting it was figuring out what I wanted that practice to look like, figuring out how I wanted to serve my clients, how much I wanted to work, how I wanted to work. And then I figured all of that other stuff out, and it was a steep learning curve, I'll be real about it, but that was the biggest journey and the biggest hurdle for me.
Yes, I see what you're saying, and I definitely am going to take that advice and continue to learn how I can join, you know, different networks and other just organizations that are working in the financial industry that can help people that are wanting to get into that field of building their own financial planning practice. And I wanted to discuss, like, when it comes to a financial planning practice, I know you have different structures of how whether you're a fee-only structure. I know there's some others. Can you kind of just talk about your approach with how you decided to structure your financial planning and how you work with your clients?
Yeah. So, you know, just as a background, I worked in a wirehouse for a few years prior to leaving and starting my own firm, right? And the advisors I worked for were fee-based, right? Which essentially means that the majority of how they earn their income from their clients is based on fees that they charge on their portfolio. However, they do still earn commissions from life insurance, annuities, you know, individual security sales if they're not in a managed account, right? An account that they're charging a percentage of that portfolio value to be compensated, also known as AUM, assets under management, right? So it was mainly in that AUM model, but then they also had other ways to generate revenue, right? And I will say, I worked for my last firm. I worked for two really great advisors. I think that they were both very skilled and both very. I think they genuinely wanted what was best for their clients. However, I think that that financial incentive can't be completely removed, right? That incentive to like sell an insurance, and even if it's appropriate, and even if people can look at it and say, yeah, that makes sense for that client, you know, I still think that there's a level of extra insistence or extra pushing on it that might not necessarily be in the client's best interest, right? And so I wanted to be in a position where I really was free of those conflicts. I know my heart and I know myself, and I'm not somebody that's going to try like be deceitful or push stuff on people that is blatantly inappropriate just for my own personal gain. But I think we're all humans, and setting your firm up from the beginning not to be subject to that temptation is really important, or it was just important for me to do it that way. So I operate on a fee only model. So what that means is my clients have complete transparency on how they pay me, right? It was also, you know, and the way I started out doing was just pure retainer, right? So they paid me a flat amount every year. They signed a contract saying they were going to pay me. It was not based on number of hours I spent. It's like, hey, you pay me a few $1,000s every year, and we'll do whatever needs to be done for your own financial plan. We're going to do comprehensive, holistic financial planning and really address all the areas of your financial life that need to be addressed, right? the I later added on portfolio management services, mostly because a lot of my clients did not want to be bothered with monitoring their portfolios, right? And they were like, "Hey, I just need you to help me with this because I don't want to do that." Or I feel comfortable enough with you, given that you have been helping me with my financial planning, and now I want to add on the portfolio management because I trust you and I feel like you're on top of things and you have my best interest at heart, right? So I added that in a few months after starting my firm, right? And both of those are completely transparent. So the portfolio management operates off the AUM model, which is greatly reduced because I'm already doing financial planning for them. It's really just to cover costs and my time that I'm spending in order to manage the portfolios for them.
I understand now. That makes total sense, and um I think that it's probably is best for someone that wants to get into financial advising to start with a practice just to learn different models, kind of like similar to what you did, and then eventually branching out to start your own. Now, I wonder, back to what you were explaining the fee only structure. Now, are the clients deciding what the fees will be for you managing their investments, whether it's you're managing their portfolio? Like, are they determining the fees, or are you more of coming up with the fees yourself and then kind of working at their own direction of what they would like?
Yeah, so I set the fees. I have a range, right? That I use for my clients based on, we'll have an introductory phone call and we'll talk about like what their financial picture is, and based on what they tell me, I can generally tell how complex and how time intensive their plan is going to be and price accordingly, right? And there's also a qualitative portion of that. Like if I feel like there's somebody that's going to need a lot of very hands-on, like they want to talk to me once a month, well, that comes at a premium, right? And so there's a little bit of a qualitative assessment as well. But I have a general range that I use and will price kind of intuitively from there.
That's good. I got you.
I will say,
So
I
yeah.
didn't answer this part before, Kevin. I got a little
Oh, you're
distracted, but
fine.
when I left Dare to Dream, it was with the goal of also serving my community, right? Because I knew that with the model that I was working in at RBC, it was mostly AUM based, and that wasn't going to be conducive to serving younger people, right? Because they had minimums, and I think the industry as a whole is moving towards serving more high net worth, ultra high net worth, not just like the mass affluent crowd, right? And so they had minimums for, they would actually penalize the advisor for less than a certain amount. I can't remember what the amount was. If your client's household didn't have at least, I think it was $1 million, they would start to reduce the amount of money that you would get compensated for having that, right? And so that meant that the advisor was under pressure. Like if they're doing the work, they want to get paid for it fully, right? And so I knew that I would not be able to serve the younger people that I wanted to there, right, in the way that I wanted to. And so I was very mindful of thinking about how can I provide this service and this value that I think they really need, while also doing it in a way that's feasible for them, right? So, you're paying a couple $100 a month for access to me at any point, especially if you're in a point in your life, which most of my clients are in their 30s and 40s, where they're rapidly changing their life. They're having kids, they're buying houses, they're starting businesses, right? They're changing jobs, going to grad school, all of those things. It's very helpful to have somebody to run a lot of these decisions by, right? And I stand by the value there, but it's they have not necessarily built up a portfolio to be serviced by the traditional financial services industry, and so I wanted to serve them in a way that they could access, right, and was realistic for them.
Yeah, that I think that being able to relate to your clients, just transparency. We don't see much of that currently now with you know just the financial advising industry. Like I know from just research, a majority of the traditional financial advisor you see, it's an older white gentleman, and I think that especially for the black community, we need more black financial planners that can really relate to our client. And I think that that connection is so important. And I actually wanted to get your opinion on when you're working with clients, like what is your approach to financial planning when you're looking at it just from a overall approach, whether it's retirement, insurance, estate planning, how exactly do you approach that when you're sitting down with a client?
Um, so, I follow a pretty standard process, I think, for somebody who's a comprehensive planner, right? So I start with an introductory call so that I start to get to know them. Once we decide that we're going to work together, we will do some data gathering, right? I will look at their statements. We'll do some questionnaires to really get a sense of where they stand, what their priorities are, what their relationship to money has been. And then from there, we'll have a conversation about, really sussing out their goals and their dreams and their aspirations. And then from there, we will, go into the strategy and look at, what needs to be done, right? I look at their financial situation in a very holistic way, right? I'm looking at their cash flow, their budgeting, their retirement, debt management, education, savings, estate planning, really the whole list of financial planning topics, right? But it's going to depend on the client's situation on whether I touch on all those, right? Some people come to me, they have no debt, so then I don't need to talk about debt, right? Or they have no kids, so I don't need to talk to them necessarily about education funding, right? So it varies greatly between clients, but I will say, the real value. So, we like to talk in our profession a lot about how there's the qualitative and there's the quantitative, right? There's the quantitative, any of us that understand financial planning can say, this is the best thing that you can do to give you the best outcome in terms of your finances, right? If your interest rate on debt is below a certain amount, then you're better off investing, vice versa, right? If it's higher than a certain amount, you're better off paying down the debt and then investing, right? All of those things are very basic, and anybody with good financial planning knowledge will be able to address that. I think where the real value comes in having a Black advisor and having somebody that understands you is being able to say with empathy, like, okay, what are your preferences? What's your tendencies with money, right? And do that from a non-judgmental place where I think our industry I know our industry misses the mark, is that, you have a 55-year-old white man advising, if he happens to accept clients that don't have a large portfolio, he's advising a 40-year-old Black doctor, for example. And she's telling him, okay, I give my mama $1,000 a month. And he's like, no, what are you doing? You know what I'm saying? Like, that's ridiculous. Your mom has to figure herself out. Well, that, for one, right there, to even, the financial planning relationship is a very intimate one, right? You're really letting people people feel a lot of shame and there's a lot of emotions built into finances. When you're letting somebody into your financial life, it's a very vulnerable position to be in. People feel real exposed, real open. It's not something that you want people to come in and then start pointing fingers like you're being dumb or this or that, or making you feel as though you've fallen short in some way. And so right there, you're closing that client off, right? And they're not willing to open up to that advisor. And the advisor might even be right, like I said, from a dollars a cent standpoint, like, hey, you're behind on retirement and you're giving your mom $1,000 a month. But by being more empathetic and understanding like some of the unique family structures, struggles that we as a community face, then you can just lead with that, right? And have that discussion about the trade-off, or like maybe alternate ways to help your mom out that are not going to negatively impact your finances, from a place of empathy and understanding versus like the judgment and being like, that doesn't make sense, so don't do that, I think I can't understate how important it is to have more diverse advisors for that exact reason.
Yeah, I couldn't agree more. I think that having empathy, being able to relate to your clients, especially when you're working with someone else that looks like us, I think that, our relationship with money is so important. Understanding the habits and some of the systematic things that person might have been doing ever since a child, back to the beginning of when you said growing up as middle class, how, you really didn't learn much about certain things when it came to finance. And I can agree to the same thing myself. My parents, they did teach me as much as they could, but most of what I've learned in financial literacy has kind of just been me just doing the research and having a passion to wanting to get into the industry. So I think that when you're working with a black family or a black mother or father, really just trying to have the empathy to understand their situation, but really understanding what their relationship is to money, because a lot of it could be generational, where they're just doing simply habits or actions that they have seen previously in their family. So I think that's very important. And I actually want to talk about diversity and inclusion because right now, I know when I was looking at research on certified financial planners, there are only 1,453 black CFPs out of a total of 88,726 CFPs. So we only make up less than 2% of all CFP professionals. So I wanted to ask you, like, how can the financial industry be more diverse and inclusive when it comes to having more black CFPs?
Yeah. I mean, if I'm honest, like the financial services industry just has to do a wholesale culture change. Um, the culture is very toxic, very, very toxic for anybody who is not a straight white man. And I'm not saying this to like, I think it's even toxic for them too, but they at least can like blend in and kind of get along, right? It's very hostile towards anybody that does not come from that real stereotypical Ivy League, country club, golf club background, right? Um, there has to be a whole lot of soul seeking and a whole lot of internal change that is beyond my pay grade, right? To be honest, like I can't even think about how you go and reform some of these big banks like your Morgan Stanley, your Merrill Lynch, and your JP Morgan. Like I can't even think about that. One thing I do think is that I think we're seeing a big change. There are a lot of advisors who might, or people that are aspiring advisors that come into those bigger institutions, right? They might like what they do. They might like finance. They might like the advisory business, but they don't necessarily like the culture of where they are, or they're looking to do things a little bit differently, which is basically my story, right? And they're going out on their own, right? So there's a whole crop of like black owned business, RIA businesses out there now that, while we might be small, there's a whole lot of us, right? And so I think if you're somebody that's looking for the bright spots, I think that is the bright spot. And I think you're going to see really a divergence, right? The big guys are, in my opinion, going to stay the way they are. It's going to be the more independent, smaller, nimbler firms that are going to change and really like evolve to be more inclusive and more diverse as well.
Yeah, I think that, as a individual that's aspiring to want to build a black-owned financial planning practice, I think the best thing that we can do is just kind of be the change that we want to see and really build amongst our communities because, like you said, a lot of these major financial institutions, who knows if they're really going to be reformed. All we can hope for is that, the hiring practices change with upper management where they look at taking actions to be more inclusive and adding more blacks within their industry. But I definitely know we still have a long way to go. And I wanted to really talk about just like net worth when you are looking at, a black family and also a white family. I know when I also was just doing like research online, the median net worth of a black family is around $24,100, and with white families, it's actually $189,100. So for someone like yourself that's actually with the industry and that are working with people, that are trying to build generational wealth, what can we collectively do as men and women of color to kind of bridge the gap to building generational wealth?
So this is another thing I feel very passionately about, right? This wealth gap is such a problem, and I think we have to come together as a community and be very intentional about what we're doing in order to do that, right? So there's a few pieces to that. On a collective level, we have to stick with our own, if I'm going to be honest, right? We have to really ensure that we are leveraging group economics as much as possible and building wealth in the ways that we can, right? So, building our own tables. So if that might be, coming together and buying some houses with your sister, right? And then investing in real estate. That might be, saying, okay, I'm going to put my money, I'm going to make sure I hire Black accountants and a Black realtor and, Black doctor. Like, I'm going to make sure that I'm sticking with my community so that those people are able to prosper. And then they also have to pay it forward and continue to invest in our communities, right? I think group economics is going to be a huge thing if we're going to move that needle. I think the second thing is that, we have to, I'm not delusional, right? I know that there are so many things that are working against so many of us, but there are also a lot of us who are fortunate enough to escape the worst of the systemic issues, right? I count myself amongst one of those people. I feel very fortunate to have done that, right? Those of us who have to be really firmly committed to building wealth and doing that reinvestment, like I talked about, right? So that investment might be, in starting your own business. It might be in, the stock market, I think always needs to be involved. It might be in your own higher education, right? Whatever, or continuing adding skills, right? Being really strategic also about the type of jobs and skills that you're pursuing, right? I'm not going to sit here and say that, we all have to be accountants and lawyers and doctors, right? We don't, in order to make good money and really change our family's financial tree, right? You could become a coder, work in cybersecurity, become a software engineer with very minimal, investment, right? You could get a certificate, or just go to a couple coding boot camps and learn some stuff online and make multiple six figures a year plus stock options if you're going to be an employee, right? We have to be real strategic and think beyond. Now, there's nothing wrong with being a teacher or studying criminal justice or being a cop or whatever we're doing, but we have to understand that there has to be a way that is more attainable for us to play catch up, right? Yeah, so that's my little soapbox. I think we just have to be real strategic and real intentional about it, because the reality is we don't have much margin for error and we got a lot of catch up to do. And I think the more we lock arms with each other and work together in order to leverage our collective strength and our collective resources, and the more we have each other's back and be like, I'm not worried about those people over there, I'm worried about us, right? The better off we're going to be.
Yes, I definitely think group economics, I've talked about it, on this show before. I think when you can, make sure that the people on your team, the people you're surrounding yourself, are Black, you're able to keep it within the family and really try to bridge the gap, like you said. And I think like what you mentioned about the relevant skills, looking at ways of how you can use tangible skills that can really impact others in the community, whether it's being a coder or even someone that can be an accountant, a lawyer, or a financial planner that can really move the needle and help each other within their communities. And I wanted to talk about Fintech a little bit. I know, and I'm sure within your industry, you've probably been hearing a lot with different things with cryptocurrency. And I just would love to hear from a financial planner that's in the industry. How do you feel about asset allocation when it comes to alternative investments? I know there have been a lot of conversations with changing the conversation of just having stocks and bonds as far as that 60-40 split, but really having the possibility of knowing where the world is going to go. When you think about blockchain, you think about cryptocurrency. How do you feel when a client comes to you about alternative assets such as like cryptocurrency?
Yeah, I think that what we're seeing at the moment is really a paradigm shift in terms of how things are going to be done, right? A couple years ago, you couldn't send money to anybody, even, and then Venmo popped up, right? You had to go through your bank or wire them money or Western Union or whatever, like even if you think about 10 years ago. And so I think we're in a period of rapid change when it comes to what the cryptocurrency space. I'm a big believer in cryptocurrency and in the blockchain technology. I think anything that works towards decentralizing power and knowledge is going to be really crucial, because I think we've all seen that the power structures that be do not care about any of us, right? So I think most of us are seeing that. I'm not going to speculate on any particular cryptocurrency, but I do think that it behooves people to pay attention to it. Now, I will say one thing I see in our community is a whole lot of rushing, right? A whole lot. And I think we feel so behind, and especially those of us that like maybe the first in our family to go to college, or maybe the first in our family to, earn 6-figure incomes. We're like, I got to build wealth yesterday. I got to get after the bag. I feel you 100%. I'm getting after the bag all day, every day. However, when you rush is when you make mistakes, right? And so you don't need to be sitting here and putting, buying some cryptocurrency that nobody's ever heard of and putting all your money in there and hoping that it goes up, right? Like similar to what we saw with Dogecoin, and even, a lot of the speculative investments in AMC and GameStop last year. Was that this year? Gosh, that was this year. This year feels long. That was this year, but you see people doing a lot of that, and I feel like I see it a lot in our community. One, because I think we're not as used to the longer term investing conversation, right? And then two, I think we're just in a rush, which I get. Like I got to make up for my own lost time and my mama's lost time and my grandmama's lost time. But at the same time, if you're putting excessive risk in your portfolio, then that's problematic, right? If you're young and you are, you put 3-4% of your portfolio in a Bitcoin or an Ethereum or something like that, I'm not mad at you. I'm really not, because that's a small enough amount of money that it's not going to derail your finances overall. And it's still giving you exposure to that. If you want to be a little bit more reckless than that, then that's on you. But you have to really be fully apprised of the risk and understand the risk you're taking on.
Yeah, I totally agree. Like, I think that in our community, I see it with a lot of these Reddit chats, these Discord chats that
Twitter.
Yes, Twitter. Like, people are such in a rush, and I've had people come to me like, what do you think about Dogecoin? Should I invest in this? And I tell everyone, like, don't follow the herd. Don't try to do something because someone on Twitter or someone on Reddit says buy this stock or buy this cryptocurrency. You have to do the research. And like you said, our community, one thing that I can say is that we don't put the long-term perspective when it comes to things. It seems like, when you tell someone, when you're building a portfolio, the goal is to hold this for 30, 40, 50 years. You don't necessarily want to try to come up fast, because that's not really how. Now, you certainly can, make money within the stock market or the cryptocurrency market. But I think the best way to keep yourself, not taking, just risks that don't make any sense is just holding it for the long term and making sure that you're doing the research, because it's a lot of people out here that are market makers, people that really understand the game, that are really betting on you not being as knowledgeable when it comes to these financial decisions of shorting or whatever it is. And you could just be making a decision based because someone else told you to. If you don't have the principles or have the understanding of how the market works, you're putting yourself in a very bad situation. So I definitely agree from that perspective. Now, as we're coming to a close with this episode, I did want to hear you talk more on your passion with helping more women get into the financial industry. I know that with your practice, a lot of the purpose of it is to help millennial women of color and entrepreneurs build a solid financial foundation with creating wealth. But can you kind of talk on that a little bit more?
Yeah. So, I'm very passionate about women having more money. There have been all kind of studies. No shade to the men, y'all are wonderful, but there have been all kind of studies that when women have more money, they reinvest in their families and their communities more so than men, right? And their kids end up being better educated, all kinds of stuff. They end up eating better, all the good things, right? All markers of health for the family increase and improve, right? I I grew up surrounded by a lot of very strong women, and so and I think that had a lot of tragic life circumstances happen because of some of their own decisions. Obviously, they are doing things of their own free will, but also I think because they didn't have the financial resources in order to be able to do better for themselves and their families. And so I'm very passionate about women in particular building wealth and being financially empowered, because I think that also means that they are able to be in relationships on a more equal footing, which is important. I will say I have a particular passion for entrepreneurial women because I work with women of color, and we're oftentimes behind the ball. We've already talked about the wealth gap, right? You look at black communities, you look at the Latino community, Asian community, we're all pretty much behind the ball in terms of income gap, the wage gap, and wealth gap. And so I think entrepreneurship is a real short breaker for that, and it allows you, if you do it right, to really build substantial wealth and do it in short order and really have autonomy and control, which is what your money does for you at the end of the day, right? So it's the best of both worlds. You make the money, and then you also control how and when you make the money. I also think that, just going back to that conversation about men, having more black CFPs, black advisors, I think we need more women advisors too, right? We need to see more women being very knowledgeable about investing. I have 3 daughters, and it's something that's very important to me. My husband and I manage our finances jointly, but I think it's important for them to see a woman talking about money, a woman understanding money, someone that looks like them. I did a workshop when I first started my firm before COVID hit, to a group of people. I think it was about 25 people. And one of the black women came up to me afterwards. She was like, "You don't know how powerful it was to me to see you, a black woman, talking to a bunch of white folks about money." Like, that was so impactful for me. And if you think about little people watching us doing that too, that's just compounded. So it's something that I think is very important as well.
Yeah, I really look forward to seeing, more black women when it comes to investing, financial planning, because you're absolutely right. You think about when it comes to business, a female black, employee, or even a entrepreneur may not, as far as when you start looking at what a female black employee makes compared to a black and a black male employee, there needs to be equality when you come, because I've seen many just research statistics where they're not nearly making as much as what a black male would be making. And I think that we do need a level playing field, and as an entrepreneur, it does give you that level playing field where you are controlling your income and you're not in that controlled environment that we talked about earlier throughout this episode. So I would love to see more black women in financial planning, and it's very necessary for us to be able to bridge the wealth gap and to be able to get the equality that I know that is deserved when it comes to black and men and women that are working in the industry. Now, the last thing I wanted to ask is, how can the audience connect with you and also learn more about your financial planning services?
Yeah. So I'm pretty much everywhere on socials. I'm most active on Twitter, Instagram, and LinkedIn. You can find me on Twitter and Instagram at ANJIEKONTE. On LinkedIn, just my name, Ananjai Konte, or via my website, daretodreamplanning.com.
Well, everyone, that wraps it up for this episode. I definitely want to thank you all for tuning in. If you can please like, subscribe, and share this video, that would be greatly appreciated. Definitely check out Anna's financial planning services. She definitely is a leader within our industry. As always, I definitely want to tell you, Anna, thank you so much for coming on the show. I greatly appreciated your time.
My pleasure, Kevin. It was a great conversation, and I'm glad to be here.
Of course. Take care.